Good morning, guys, and welcome back to my channel. This is Nick at Optima PS. It's a bright and breezy early sunny morning here in the Philippines. I've been up since the crack of dawn because my wife, bless her little heart, decided to wake me to see if I wanted to go to church, which I didn't. And so here we are. I decided to make you guys another video. There's a couple of things that have been playing on my mind recently that I thought I'd bring up. And one of the biggest questions of the moment is the Bitcoin halving and the impact that's going to have on the price of Bitcoin. Obviously, we all know that the halving does drive that price up through the roof. I'm unsure if it's going to be as impactful this time, mainly because there's only about 2 million left to be mined, and there's already 19 million out there. Although half, or some of those, not half, but some of those 19 million are most likely no longer in circulation now. They've been burned, they've been lost. We've all seen the stories of people that have died and not left their passkeys. We've seen stories of the guy in the UK who threw out his old hard drive and it's somewhere on the garbage tip and nobody knows how to find it, or they won't let him go to try to find it. He's got millions of dollars worth of Bitcoin there, and there's all these different stories of bits and bobs that have been lost. But the honest answer is there's far more Bitcoin out there now than there is still to be mined. And so it does make me wonder what the impact of this halving will have compared to some of the others. But we'll get into that in more detail a little bit later. For now, the first thing to say is, as you're all very much aware, I hope by now, I am a financial advisor, but anything I say or do in this video should not be taken as financial advice. I've said it before, if I were to give you financial advice, you definitely know about it. There'd be a whole bunch of disclaimers to be signed and paperwork to be read and signed through. I'd do fact finds, and you'd know exactly what was happening if I was to give you financial advice. And until that point in time, this should absolutely not be construed as financial advice or anything more than just a guy on the internet sharing his opinion. To use a phrase from one of my favorite channels, Moon Lambo. Throw out a thank you to that guy because I've been listening to him for a number of years now. And if you don't listen to him, give him a try. But moving forwards, what I wanted to talk about today, the title of the video is not decided yet, actually. I'll come up with that in a while once I finish the recording. But it's something along the lines of the Bitcoin halving is approaching. I don't think it will be as impactful as maybe some of the others have been in the past. But rest assured, the big banks are therefore coming for your crypto. They're definitely coming for your Bitcoin right now and your crypto in the long run. I've got a little clip here where we're online having a look at the screen I'm sharing right now. This is the Bitcoin ETF tracker. It tells you there's 68 billion, give or take, US dollars worth of Bitcoins sat in the total market cap of the Bitcoin ETFs. That in itself is only about 5% of the total supply of Bitcoin. Give or take, or of the market cap right now, which doesn't sound like a great deal. But then if you think that these guys have only been doing this for a few months, that is a lot. That's an awful lot of Bitcoin they have. And when it comes to market share, that's an awful lot because with anything in the world, if you are sat in a situation where someone has a much bigger piece of the pie than you, they get a more controlling stake in how that works. And in the case of the big banks, I think it's going to come down to how they can manipulate markets to shake those guys out. But we'll get into that in a little bit more detail a bit later on. The first thing I wanted to do is touch on something because it's something that's quite pertinent, even with myself. We all know that Bitcoin is a thing now. We're all pretty much aware it's here to stay. I think we can all accept now that Bitcoin is too big to fail to a certain degree. We're all aware of the phrase Bitcoin mining, but what exactly does that mean? I mean, I know myself that I'm not a tech whiz. I find it incredibly boring, to be perfectly honest with you. It's just, I don't mind if you are. I don't mean that disrespectfully to anyone who is a tech guy and they find this incredibly interesting. But for me, it just doesn't tick my boxes. We're all different people. And in that respect, I therefore don't pay an awful lot of attention to it. I don't go out of my way to research exactly what it means. What is Bitcoin mining? And I've done a little bit of digging today just to find a few things that really dumb it down for people like me. Hopefully, people like some of you out there that will sit back and go, yeah, you know what? I don't really know what that is myself. So I'm just going to jump over onto this. This is Investopedia. You can't quite see my screen's chopped off the top there, but this is Investopedia's take on what is Bitcoin mining. So Bitcoin mining is the process by which transactions are officially entered onto the blockchain. It's also the way new Bitcoins are entered into circulation even. Mining is conducted using hardware and software to generate a cryptographic number that is equal to or less than the number set by the Bitcoin network's difficulty algorithm. So the first miner to find the solution to the problem receives the Bitcoin reward, and the process begins again. The Bitcoin reward miners receive is an incentive that motivates them to assist in the primary purpose of mining, to earn the right to record transactions on the blockchain for the network to verify and confirm. Now, if you're anything like me, I nodded off halfway through that. It's not something that floats my boat. It's not something that gets me excited to read things like this. But it is important just to have a basic understanding. So key takeaways: Bitcoin miners receive Bitcoin as a reward for creating new blocks which are added to the blockchain. Mining rewards are paid to the miners who discover a solution, and the probability that a participant will be the one to discover the solution is related to the network's total mining capacity. And you need a graphics processing unit, a GPU, or an application-specific integrated circuit to set up as a miner. So that doesn't really make an awful lot of sense to me still, to be perfectly honest. I'll flick across to this flowchart, which actually made it settle with me a little bit better. So how Bitcoin how Bitcoin transactions work. So Alice wants to buy a product from Bob using Bitcoin. She uses her private key, which signs a message with the amount of Bitcoins and Bob's address requesting a transaction. The transaction requested by Alice is bundled into a block with other transactions, and the block is broadcast to all mining nodes in the Bitcoin network. Next stage along, the network of nodes validates Alice's transaction using algorithms in a process called mining. So that's where the mining comes in. It's really a state of validating the transaction. Yeah. And the first miner to validate a new block for the blockchain receives a portion of the Bitcoin as a reward. The transaction is then complete, and the block is added to the blockchain. The block is permanent and can no longer be modified, and Bob receives his Bitcoin from Alice. That's about as simple an explanation as you can get. I've scoured the internet to find a more dumbed down version for people like me. That's about as simple an explanation as I can get. And I think from this point, I kind of look at it and go, well, I'm aware of the very, very basics. I mean, this one here goes into much more detail. It tells you, fast fact, only 1 megabyte of transaction can fit into a single Bitcoin block. The 1 megabyte limit was set by the creators. The limit has become controversial because some miners believe the block size should increase to accommodate more data, which would effectively mean that the Bitcoin network would process and verify transactions more quickly. Again, it gets a little bit over my head at certain points in time. One of the primary reasons people invest time and money into mining is for the reward, which over time has become very valuable. For example, on March the 8th, 2024, so this is quite an up-to-date article. We're only about March the 23rd or 24th today. So on March the 8th, 2024, Bitcoin's price topped $70,000 for the first time, closing at 68,285. And the reward at that time was 6.25 Bitcoins at closing. And that reward was worth $426,778.25. So quite a significant chunk of change. So that shows you why people go into the mining. And we're all aware how the halving works to a certain degree. We know that it gets more difficult to mine as time goes by. This goes on to say, however, the rewards for Bitcoin mining are cut in half every 4 years. That's approximate. It's actually a little bit less than 4 years. When Bitcoin was first mined in 2009, 1 block would earn you 50 Bitcoins. In 2012, this would be 25. By 2016, this was 12.5. On May the 11th, 2020, the reward halved again to 6.25. Again, this will be, or it's predicted to halve again in April 2024. I think the date people have said is between the 20th and the 22nd of April. And it will go to 3.125 Bitcoins as the reward. And so the concept is the more difficult it becomes to mine, or the less reward you get for the mining process, the rarer or the scarcity increases on the Bitcoin, and that should drive the price up. Due to the halving process and increasing prices, miners want to receive as many Bitcoins as possible because the supply of new coins is slowly dwindling. Sometime around 2140, there will be no more new Bitcoins created. The competitive incentive to mining will disappear, with only the transaction fees remaining as a reason to participate in Bitcoin's network. Some miners might still participate to take part in decentralized currency, but it's likely that without the reward, most people will not want to mine unless the fees increase enough to make it worth their while. So that's a double-edged conversation as well. So what that's kind of telling you is the fewer mining or the fewer Bitcoins there are left to mine, the longer we go into this process, the more complicated, difficult, and time consuming and cost inefficiency that comes into the process, fewer people will want to mine, and that might actually drag the process out a little bit further. But it's saying that people will remain involved because the fees may well increase. So it might become more expensive to use Bitcoin. And so there's other reasons there to have concern for the future and to a certain degree. But going back to this one, miners' rewards for successfully completing one block halve every 210,000 blocks, or on average about every 4 years. I think someone's pointed out it's about 3.5 to 3 years and 10 months, something like that now. But this shows you in very, very simple format. So as time goes by, you get fewer rewards for mining. Since the beginning, there were 21 million coins to be mined. New coins in 2012 was 10.5 million were mined. In 2016, 5.25 million. In 2020, 2.65. So that number will continue to go down. And where I'm sort of talking here is that this is the important part. As time progresses, as each halving comes along, it's not just the rewards for the miners that reduce down, it's the number of Bitcoins that are released. So yes, to a certain degree, that drives scarcity and should drive the price up. But it also drives down the impact of that halving event. And so I don't think this halving event will be as impactful as the last one. I think it will be impactful. I think, to be honest, it becomes a self-fulfilling prophecy. We all know that the halving event drives the price up. And therefore, when a halving event comes along, the price goes up. But actually, there's 19 million of the 21 million already been mined, give or take. And so we're in this very strange position where we're talking about this halving event being really impactful because it's going to release 2 million, or it's going to release a portion of those last 2 million Bitcoins. Even if it were to release the whole 2 million now, that wouldn't be that impactful because there's 19 million already out there and being mined. Now, again, it will be impactful because we all know it's going to be impactful. But I think the longer this goes on, in fact, I don't think I know, I'm aware how all things in life work when it comes to supply and demand. The fewer that will be released at each halving event, the less impactful that will be because it's a smaller percentage-wise of the overall circulating supply. And so this time round, I think it will still have a big impact, but I think it will be less impactful than sometimes before. And I think what you're going to see, and the reason for the title of this video, which I still haven't 100% decided on yet, but I think is going to be along the lines of the fact that the big banks are coming after your rewards or coming after your crypto, is there's more to the bank for the banks to gain now in shaking those guys out. Yes, to wait for these extra Bitcoins to be mined is important to everybody involved. The more that come out, the more there's a circulating supply. But actually, if I'm a big bank and I'm sat there with billions, trillions of dollars to spend, my target is to shake out us guys. It's to say, I want to take those Bitcoins from the hands of the people and put them into my pocket. Going back to this one here, we can all see that 68 billion Bitcoins now held by the ETFs. Clicking across here, the global cryptocurrency market cap today is 2.57 trillion, which is, that's just today's number, I guess, coming from, I think, CoinGecko. The market cap of Bitcoin is 1.26 trillion. So that tells you Bitcoin dominance is 49.12%, which is quite high. But realistically speaking, that tells you 1.26 trillion is the total market cap, and 68 billion of that is down there in these ETFs. And that's give or take 5%, I think, if I've done my maths correctly. With that in mind, and this is talking about the amount of cryptocurrency that the big banks hold. Now, there are rules around the ETFs, so I'm not going to tell you that they can use these ETFs to manipulate the price of Bitcoin. I don't think that's true. There are various rules they have to stick by. I mean, those Bitcoins that are owned by the ETFs are not definitely owned by the trust as such. I mean, it is, but they have a responsibility to the investors. that represents the investor's shareholding. So they're not going to use these coins to manipulate markets. But this is talking about how many Bitcoins each of these ETF issuing companies, Grayscale, BlackRock, Fidelity, ARK, Bitwise, ProShares, VanEck, Valkyrie, you know all the companies. This tells you how many they own on behalf of their investors. This doesn't tell you how many they own themselves. And they've now got a reason to be involved in this market and to manipulate this market more, because what we have is a situation where we saw it a few weeks back. There was a shakeout from the new all-time high. It was something about $600 million worth of Bitcoin was shaking out from people. Either this was people who were trading leverage on long trades were shaking out because the price suddenly crashed. Maybe it was people who hit their targets and wanted to sell they'd achieved their goals. They wanted to sell they'd set their stop loss or they set their sell target for the all-time high, and they'd achieved that goal, and they sold their Bitcoin to exchange it for fiat, and they're very, very happy with the result of that. Maybe it's somebody that bought Bitcoin back in, 2013 for pennies. Maybe it's somebody who bought it in 2021, at the peak, and they've been down ever since, and all they wanted to do was get out of this market that's left them extremely cash poor and holding an asset that was worth less money. They decided it's not for them and they want out. There's 1,000 reasons why people could have sold, but the end result was that BlackRock gobbled up almost all $600 million worth of those Bitcoins, which had been sold out. And I think that's a pattern we're going to see more and more often. And I think we're going to see a more volatile market more often now. And the reason for that is that every time we panic and sell, these guys have the ability to gobble up all our crypto. Now, does that mean that in the background they're using their own privately held coins to manipulate the market? I can't tell you that. I can't guarantee that. The nature of Bitcoin, I know perhaps somebody smart out there can know. Some of these whale watching sites, they do seem to know who owns certain wallets and things like this. But I know it's happening, even if I can't prove to you it's happening, because that's what big banks do. They do it with absolutely everything. It's a very fine line between insider trading and deliberately selling and rebuying your stock, but everyone is allowed to do it, and I'm certain that they do it. There's actually no regulation in the Bitcoin world that stops them either right now. One of the big things that I'll say to my clients is, listen, it's the Wild West in crypto. There is no real regulation that stops these guys from selling $1 billion worth of Bitcoin to crash the price, letting all you guys panic and sell, and then to buy back in at half the value, at 10% down, whatever that number might be. It's getting too big now to manipulate the markets by major percentages. You might shake it down by 3 or 4% in a day, but that's a lot of money to be made if you do that every day. It's one hell of a scalping job, isn't it? But if you compare that to, let's say, the S&P 500, it's an awful lot easier to manipulate the price of Bitcoin than the S&P. So these guys have found a market where they can legally, or not illegally, immorally perhaps, manipulate the market, and they can drive people out. The other side is, and I don't mean this in any way or form to be disrespectful to anyone out there. I have absolute respect for you guys all getting involved. But one thing I see an awful lot in the cryptocurrency world is that a lot of people are raw new investors. It's one of those easy things. We can get into Bitcoin, we can get into cryptocurrency in the main with $10, with $20, with $5, with $500. For some people, it might be $50 a month, but it means we're all, and I don't mean this in a disrespectful way, but we're all newbies. People who choose to go into this world are newbies, and even the more experienced people have only got 4 or 5 years experience from trading. I don't profess to be a world-class trader. I don't profess to be a source and a font of all knowledge on these things, but I've been around the block a few times. I've been in the investment game for 20 plus years, and I know that these banks will deliberately manipulate the price. Any big holder can manipulate the price. That's the way markets work. And in that respect, it's something that we have to be aware of. They will be able to shake us out. They have various tools, reasons, methods that they can do this, and they will shake us out. And so the reason for this video is to say, make sure you know what you want to achieve from this investment. Make sure you have your end goal set. I think there's a lot of people that have been very successfully day trading, swing trading these markets for a long time, that suddenly are finding the big boys are sat at the same table with a different game plan. And what's worked historically might not work moving forwards. Um, it's all well and good me saying I'm going to sell my Bitcoin when it hits $75,000 and I'll buy back again when it hits 65, because that's what's happened for the last 10, 15 years. I know exactly what to do. But what happens if I sell it at 75 and BlackRock gobbles that up? They're not releasing those coins. Once those coins end up in BlackRock's pocket, they are there forever. You may as well have inadvertently sent them to a dead wallet and burn the tokens. They will never come back into the open market, which definitely will drive the price up for us holders. But if you think you might be able to swing trade, to day trade in the ways you've got away with for the last 10, 15 years, I think you're in for a rude awakening, because I think we're now in the game with boys who do not need to win in the same way that we need to win. They do not suffer the losses like we suffer the losses. Yes, they have shareholders to report back to. Yes, they have investors to report back to. Um, but an ETF's really, really easy from a management point of view. If the value of Bitcoin goes down, well, it's not a managed fund. It's an ETF. They say, well, what, we charge you 0.1, 0.3% per year, 0. What are these charges? On average, let's go with 0.25 across the board, apart from Grayscale, which is dumping left, right, and center anyway. But you're looking at this way, you're saying, we don't charge you a management fee. We aren't being paid to actively manage this for you. It's an exchange traded fund. The price goes up and down, and you hold it. You go up and down with that price. So they don't have to answer to anyone in the same way they might do with their traditional investment world. And so we're in a really strange world where they can drive the price up and down however they like. They're in this for the long game. They're in this for the long term, and they can buy back in without ever needing to worry in the same way that you and I worry if Bitcoin crashes down to $25,000 again next year. And so they are coming for our crypto. They're coming for our Bitcoin. The next ones that switch across and or the in the next coins that open up to ETFs, I suspect it will be Ethereum. Maybe not now with the SEC attack in Ethereum, but I suspect Ethereum and then probably XRP, because they're the ones with the most demand out there. Perhaps Solana now, but they will be open to this same manipulation, to this same problem, I guess I would call it. Now, it's not a problem to me personally, because I fully expect this to happen. And if you fully expect it to happen, you can plan around that. So I'm one of the few guys out there that will look you all in the eye and tell you, honest to God, I have no intention to sell my Bitcoin. I have no intention to sell my XRP when we get to the top of this market cycle. That is not financial advice. I'm not telling anyone else to do that. You take a look at your own circumstances and decide if that's right for you. But I can tell you that the way I invest my money, the way I invest into crypto, this is a significant portion of my portfolio now, but it's not my only portfolio. And the way all my investment portfolios work is they're there for the future, and I don't care if they go down in value. I don't care if they remain down in value for 4 or 5 years. I can't guarantee you that will always be the case. I don't see any reason why not. But hey, I'm in the same world as everyone else. I'm a self-employed person. Both my companies could go bust. At the same time, the job market in my sector might be completely void. It might be that everyone goes bust in this industry. I think it's incredibly unlikely, but you never know. And I might find that my income is down. I might find that my employability is down, and I can't just go out and find a job in the sector I'm used to. But I'm confident enough I could find a job to get me through. I'm confident enough I've got savings to cover 6 to 12 months. I always have 6 to 12 months money in the bank. I'm confident enough that I won't need this money before I find another source of income. I do have some apartments and a house that rent out. Um, my lifestyle is relatively cheap compared to my income, so I've set myself up in a position where it should be as unimpactful on me as possible, because that's kind of what I do for a job. So I gave myself the same advice I give to my clients. But I'm in a position where I don't think I'll ever need this money out, and therefore I'm in a position where I don't need to sell when we hit the top of this market. I may choose to sell some, not all the the coins I hold are the ones I want to hold for the long run. Not all of them are ones I think will go up in value, continue to go up in value forever. Some of them are shit coins and meme coins that I've just picked up because I actually bought them for the purpose of selling them at the top of this market. So to say I won't sell anything is not right, but I won't sell the coins in my portfolio that I'm most attached to, and that's XRP, XDC, XLM. I have a couple of Quan. I have a few little bits and bobs of Litecoin, things like this. I've been buying Algorand recently because it's so deflated. Since about the last year, I've been dollar cost averaging into Algorand. Bitcoin, I don't have many of. I don't normally share what I hold, but I'll tell you in Bitcoin, I've got less than a third of a Bitcoin. Yeah, I won't sell it because I think it's going to go up in value on a semi-continuous basis. It will still be volatile, but I think now that the big boys are in, it will go upwards. But I'm in a position where, realistically speaking, I bought that back in 2022, I think, after the big crash, and I'm just going to keep hold of that forever. I could have bought more at the time, but I didn't really care. My intention when I bought it was to sell it, actually. Was to come to this next bull and sell it. But now with the ETFs coming out, I'll probably just hold that one along with my XRP, XLM, XDC. I'll sell some other things to pay me back. I think if I sell all my meme coins, my other altcoins, that will repay me my entire crypto investment. If I sell, not quite yet, but at the height, all my crypto investments are in positive territory. I only buy when the price is incredibly deflated. But those ones will actually mean I'm now gambling with house money, so I can hold on to everything else, knowing it's only been made from money I've earned in the sector. So that's why I'm on one side. I'm happy to watch things go down, but in the same respect, it's because I don't need the money. I've done this sensibly. I'm in a position where if the market goes down, I can release equity, capital, savings from elsewhere. It won't bother me if we go into another bear market and I don't, I watch the value go down for a significant amount of money. Even if we fell 80% again, I can deal with that. So I'm in a strange position that I don't need it out. So it's not financial advice to anyone at all to say, keep yours in, but I'll probably keep mine in because I'm scared that there will be a position in the future where it will be very, very difficult for me to reinvest that capital back. So obviously, in an ideal world, I'd go, great, I've got X number of XRP, I'm going to sell them where I think the top of the market is, I'm going to let it fall down 65%, then I'm going to put all that money back in, and I'm going to buy 2 or 3 times more XRP than I had in the first place. Dead simple, right? But the problem is, will I be able to buy that back? I don't know. And because of the way I invest, I don't need to take that gamble. So I'm happy to watch mine go up and down. And everyone will scream at me it's the wrong thing to do, but I'm happy for that. And to be perfectly honest with you, I've come to terms that that's what I'm going to do because I think they are coming for our coins. I think in the background you'll find that every big bank is looking at which ETFs will be next, and they're going to be stockpiling those coins. And the only way they get hold of most of them is to buy them from us. XRP is slightly different because there's that big number that's still held by Ripple themselves. People keep complaining they're dumping on the market, but actually they're dumping on the market in a way that the price still continues to go up slightly. We're not enjoying the same amount of profits as everyone else, but one day they won't have much left in that escrow account. Maybe the big banks will buy it behind the scenes. Maybe they'll just slowly release it. I don't know. I suspect they'll keep hold of the vast majority of it. But in the same respect, as time goes by, it'll be more difficult to buy these things. There's more people going to be getting into this sector and hodling. And I think one day we're going to be talking about drops of XRP in the same way as we talk about Satoshis in Bitcoin. Me saying to you today, I've got less than a third of a Bitcoin, but it's still a significant amount of money. We'll be talking in a similar way about XRP. It might not be I've got less than 1 XRP, but it's still significant. It might be I've only got 5,000 XRP, but it's still significant. 500 XRP, and it's still significant. So we're in a strange position where I think the whole market is going to be showing a increase in demand and therefore a reduction in supply as time goes by. And my message here today is be wary of the big banks. They're coming to get those coins. This isn't going to be the same as it's been in the past. It's not me buying from you and you buying from me anymore. These people have very, very deep pockets, and therefore they can afford. If I can afford to see 1, 2 bear markets, trust me, BlackRock, Grayscale, Fidelity, ARP, Van Eck, all these big, you've got WisdomTree down there. WisdomTree only has 50 million. That's a tiny amount for WisdomTree. It's a huge company. So they can afford to hold out an awful lot longer and just to gobble these up and never release them back to the open market. So my message today is be careful how you trade, be careful how you play the game. It's not going to be the same game you played for the last 10 years. And to you newbies out there, just be careful, hold your nerve, don't get shaken out until you're ready. This market will see many pullbacks, but it will go higher than it is today. That's almost a guarantee. I can't guarantee it, but that's as close to a guarantee as I can give because we're in the early days of the bull market and things are going to go up. So enjoy it, but be incredibly careful. Think things through. Have a plan for yourself. If you need to sell, definitely sell at the right time, and I hope you can get back in the future. But if not, at least you've achieved your goals, you've made the profits, you're happy. I've been rambling on for 31 minutes, which is longer than I normally like to do these videos for, so please excuse me for that. Thank you for staying the course. If you did enjoy this video, please like and share and subscribe to the channel. It's really helpful to me, and obviously I thank you kindly for that. So yes, thank you very much for your time. I'll be back again tomorrow with another couple of videos. And in the meantime, have a great day, have a great weekend, and we'll speak soon. All the best, Nick.